Hello and welcome to Markets at noon. It's results season as well, and we'll soon be joined by the management at Jindal. So that's a company which declared numbers, and if I'm not wrong, the numbers particularly were looking in pretty strong. Markets so far are decent. It's good as far as Nifty is concerned. Broader markets are doing well. It's led by oil. Anything that's got to do oil in terms of consumption has been doing well today. Let's go across. The management at Jindal Saw is now with us. Neeraj Kumar, Group CEO and whole-time director, is now joining us. Sir, congrats on a great set of results. Let's talk about the average realization. How did it contribute to your top line?
Yes, this is actually an effort which has been going on for the last few years in terms of a comprehensive reorganization. We are at the fag end of it. In our core businesses, we have expanded and we have penetrated. So we definitely have the benefit of now some tailwind behind by the government policies, but it's actually a combined result of the hard work of the last few years, expansion in our core businesses and the tailwind from the government policies.
Last few months have seen tremendous volatility in commodity prices like iron ore, coking coal. How is the company managing to tackle this move?
If you see, the last quarter typically has always been good for organization like ours, because we do have a large amount of orders which is from the government sector, and therefore our last quarter result usually would be among the best among all the 4 quarters that we have. Raw material prices, you are right, has been spiking. We have a very robust strategy to hedge ourselves, but we do get impacted, and therefore if you see our EBITDA to sales ratio in Q3 has been a little lower. Q4 has shown improvement, and we expect that it will continue forward, because now we are able to pass on those raw material price increases to our customers. But I must reiterate, we have a robust strategy of hedging our prices against the raw material prices. So whatever spikes etc. are there, they are temporary in nature for us.
How did the export business do? What percentage of revenues comes from export? We understand the going may be tough there, given the anti-dumping duty which has been imposed on Indian pipes.
At present, our export is a little on the lower side. Typically, we like our exports to be between 30 and 40% of our top line. At present, we are in the 20s. We expect this to improve, because now with the Middle East market opening up, in terms of now the oil price stabilizing, because you know the entire GCC economy is largely based on oil prices. So that stabilizing, Saudi opening up, and the infrastructure spending now beginning there, Iraq kind of beginning its reconstruction, we expect our exports to grow in this current year.
How do you expect to do it in FY19? Any volume, sales targets, any guidance that you would like to share across segments?
For Jindal Saw, we are out of the kind of maze that we were there a few years ago. And from here on, we see a much more clear path for Jindal Saw, where it would remain focused on its core business. We will continue to do good business, and the overhang or the weight of the subsidiaries and the associates that we had would all get over or will fall away during this year. So we expect now Jindal Saw to emerge as a very robust and a very strong market player, where we will dominate the market.
Great, Mr. Kumar. Thanks a lot for taking time out and chatting with us about the way forward for Jindal Saw, as well as what really transpired in the quarter gone by.